Hey, everyone. Welcome back to the Nadlan Forum Podcast Daily. Lior here. If you're tuning in after last week's crypto mortgage deep dive, you'll notice today's a whole different flavor, but still in that finance meets real life zone we love. So let's get right into it. Reverse mortgages. You see ads pop up everywhere for these, especially if you're, let's say, in the ARP magazine demographic. But what actually is a reverse mortgage? If you're imagining you send a mortgage company a bill each month, well, it's kind of the opposite. Here's the deal. A reverse mortgage is really a special kind of loan designed for folks age 62 or older. Although some private versions out there let you start at 55, but most stick with the 62 rule. Now, instead of you paying the bank every month, the bank pays you, taking what's called your equity in the house and turning it into spendable cash. Usually, people do this via a home equity conversion mortgage, HECM for short, which is a mouthful. But just know it's the most common one and it's backed by the FHA. There are proprietary or jumbo loans for folks with pricier homes too. As for how you actually get the money, it's not just one lump. You can opt for monthly payments, a big chunk up front, maybe a line of credit for emergencies, or sometimes all of the above. Think of it like a menu, but instead of appetizers or desserts, it's cash options. Repayment is, well, interesting. The catch is repayment only comes due when you sell the house, permanently move out, or unfortunately pass away. At that point, your heirs or estate have to deal with paying the loan. Usually, selling the house is what happens. I'll never forget the first time this landed on my desk. It was maybe, 2014. I was working with this couple in Brooklyn, both north of 70, and suddenly they get walloped with a pile of medical bills. No kids nearby, not a ton of cash lying around. They saw a reverse mortgage as the ticket to keeping the lights on without selling their only asset. We went through the whole thing, HECM counseling, the options, the what ifs if one of them passed or if they needed to move for care. It really drove home for me how these loans aren't just numbers in a spreadsheet. They're about real people holding on to their homes. All right, so why would anyone put their home equity on the line like this? Well, first, there's the very real benefit of not having a monthly mortgage payment. For retirees, especially if you're only living off Social Security or your savings, cutting out that expense can be huge. You also get to age in place. No need to downsize or move to assisted living just because money's tight. The steady stream of income, whatever form you pick, can help with unpredictable costs. Healthcare, home repairs, or groceries, especially in these inflation whiplash times. But here's the flip side, and honestly, is the one that doesn't get enough airtime. Reverse mortgages do have some serious risks. First, there are those upfront fees, which frankly can be higher than a regular refinance or home equity loan. And the interest? It doesn't go away if you ignore it. It accumulates against your home equity, meaning the longer you stay, the less you own. You're also on the hook for taxes, property insurance, and all the usual home maintenance. Mess up on those, and you can actually trigger foreclosure even if you're getting payments. And your heirs' inheritance gets eaten up. Sometimes there's just nothing left after the loan's paid off. I saw the risks up close in Florida. My friend had an aunt, mid-70s, who didn't quite get the need to stay on top of her insurance bills. She missed a couple payments, thought she'd just catch up, and suddenly she was looking at foreclosure letters. I mean, that's the nightmare right there. You get the extra cash, but if the details slip, you can lose your home anyway. It's so important to understand not just how the money flows in, but what you're responsible for along the way. So look, reverse mortgages aren't the only cards on the table, right? Before locking in, you've got other choices. Traditional home equity loans if you want all the money upfront and can handle steady payments. A HELOC, which is like a revolving credit line for emergencies, or even cash out refinancing if your rate situation is favorable. Some lenders market specialized products like the Longbridge HELOC for seniors, which targets retirees who still want flexibility but without all the reverse mortgage rules. And don't forget, you can always rent out a room, move to a cheaper place, or tap state programs for extra help. Sometimes selling, downsizing, or getting creative with your space can give you cash without losing as much control or inheritance. If you're considering a reverse mortgage, or frankly any big financial leap, here are some must-ask questions. How long are you really planning to stay? Is it crucial to leave your home to your kids or grandkids? Can you stay on top of upkeep, taxes, and insurance, not just now, but 5 or 10 years down? And have you seriously checked out the alternatives? Or is this just what a TV ad convinced you to do? Take your time. These deals aren't disappearing tomorrow. One thing you hear me say a lot on this podcast, especially if you caught the episode on rehab to perm loans, is get good counsel. With reverse mortgages, it's even more non-negotiable. Always work with a HUD-approved housing counselor and loop in your financial advisor if you have one. Talk it through with family members, especially if they might be affected down the line. And never ever sign anything you haven't had a lawyer look at. Scams are rampant. Anyone promising you guaranteed investment returns if you just take out a reverse mortgage and hand over the money. Run for the hills. High pressure tactics, contractors pushing for renovations you never asked for, or anyone getting you to sign away power of attorney without a full explanation, that's a hard no. Bottom line, reverse mortgages can be a real lifeline for some folks, but there's a lot on the line. The smartest move is to get every question answered and never rush. We'll tackle even more options and real stories in coming episodes. So stay tuned and keep those questions coming, whether it's emails, forum posts, or good old word of mouth. Thanks for listening.